It's the first week of April, so you know what that means, right? That's right, we're going to look back at how the real estate market in Tampa did for March. Stick around. Hi, welcome back. My name's Joe Brown. I'm a realtor with Century 21, Elizabeth Beggins, located in South Tampa. Thank you so much for being here with me today. So, if you've been with me, you know at the start of each month, I look back to talk about the real estate market for South Tampa, the five zip codes of South Tampa. But stick around to the end because I want to give you a 6-month perspective of what's been happening. It may be more than 6 months, but very interesting trends that we're seeing, concerning too. And I have some concerning numbers this morning. So I'm going to put the chart up here just so you can follow along. So let's start with active listings. And you can see active listings were staying about the same, 442 compared to 444. Now, again, if you go back to 2019, we were at 1,500, 1,600. So we're still only a quarter of where we were. But over the past few months, we've been holding even. And in fact, over the past year, we may have doubled the number of listings. It just depends the time frame you're looking, right? Look at new listings. Now, I mentioned this last month. We dropped down to 201. And I wondered, is that just like a blip? Because on average, we average about 250 new homes a month, knowing November, December, January is slower for people listing, and it picks up in the spring. Well, you see that here. In March, almost 300 families listed their home for sale in South Tampa. And how about days to sell, right? So you put the house on the market, how long is it going to be there? Still holding about 30 days. Which is 1 month, which is still fast, not as fast as it was 18 months ago when it was 7 days, 8 days, right? So we're at a month. Now, again, if you look historically, go back to 2019, we're looking 60, 70 days on the market. So to say a house is on the market for 30 days is still fast. And there have been recent stories, I'll talk about this, recent stories of homes on the market just for days. We may be getting back into that situation. Look at sales. Sales, we went up to 190. And I'm going to talk about this later when I talk about trends. But it balances, right? More people putting home on the market, but we also have more sales, and that's what's keeping active inventory even. Because if there were less sales, more homes on the market, active listings would have gone up. So sales still, I say brisk, right? Compared to last year, we see an uptick. Median sales price, again, my disclaimer is we don't know the age of the house, the condition of the house, the location of the house, but just in general, you can see we're still hovering about $600,000, right? This is very interesting. The ratio of the sales price to the original price. And if you're new with me, this is how I explain it. If I list my home for $500,000 and it's getting no interest, then I may drop it to $450,000 and then it sells. And it sells at $450,000. So one statistic said Did it sell for what I listed it at? Well, yes, I changed the listing price to 450. However, the statistic I'm sharing is, did it sell to what I originally had it priced at? No, at $450,000, it's only 90% of the original asking price. So here, what's the percent? It's 96%. So here's my comment about that. The people, go back to the headlines. I did a video on this several months ago. Look at the headlines. Market's going to crash. Home prices are falling. Well, we're talking 4%, not even 4% difference from the original price to sales price. Now, a couple things happened, right? Sellers are no longer expecting, right, these high inflated prices. So sellers are getting more reasonable and listing their home more in line with what the market says. If you remember 18 months ago, I could list a house for $400,000 and it sells for $470,000. You heard those stories. Well, now people aren't paying the $470,000, and homeowners are saying, well, let me just go in what the market says the home should be priced at. So that ratio, 96%. So the people that are still on the sideline waiting for a 20% drop, 30% drop, we don't think that's going to happen anytime soon. Because it's all about supply and demand. So take a look at the very last figure, month supply of inventory. You see, we dropped to 2 months, right? 2 months of inventory on the market, still very fast. If you think about put a home on the market and it sits for 12 months, that means people aren't interested in the home. Well, in the real estate world, we divide the year and say anything under 6 months supply of inventory is a seller's market. Anything over 6 months means it is a buyer's market, meaning there are more sellers than there are buyers, so the price is better for buyers. It's a seller's market because there are fewer homes on the market. There's still demand for homes, as you can see in the sales figure, right? Still demand for homes, and that drives prices up. The law of supply and demand. So now let me shift and share some other statistics with you, right? And this goes back maybe even to last summer. So this may be 9 months of graphs. So again, it's all about supply and demand. So let's just first of all talk about new listings. These are families that have decided to sell their home. Look here. Well, what do you see? What pattern do you see? Yeah, there's really not a pattern, is there? Right? It's up some months, down some months, up some months, down some months. And so it's consistent in that it's inconsistent, right? It's really a normal wave of homes on the market. But as I said earlier in this video, if you take the average, we average about 250 per month. Well, now let's take a look at active listings. And what do you see? Well, so at some point, we saw active listings going up, but now they're starting to drop again, right? And law of supply and demand. If there's fewer supply, what does that do to home prices? It keeps home prices elevated. Now, I won't say it's an accelerating growth, because what's damping that growth is interest rates, right? You're still talking about buyers being able to afford a home at a certain price. Interest rates are affecting that. And I'll talk about interest rates in just a second here. The last graph I want to show you is sales. And you see, sales started to come down, but now ticking back up. And sales, on one hand, is a reflection of inventory. Not all the time, but it's a reflection of inventory. For example, if I have 20 pairs of sunglasses, all I can sell is 20 pairs of sunglasses. If I have 5 sunglasses, I can only sell 5 pairs of sunglasses. And so if you say, well, Joe, you sold 20 sunglasses last month, and this month you only sold 5. Well, it's not that my sales have dropped, it's that my supply of inventory has dropped. And so when we look at active listings is going down. So the number of sales will absolutely necessarily come down because fewer inventory. But let me talk real quick about interest rates. I'm recording this on Thursday. And if you don't know, Thursday noon, Freddie Mac announces the new mortgage rates, starting now for the next week. And again, these are prime rates. Your individual rate will be based on your credit score and your lender. So the rate right now as it sits is at 6.32. I suspect it's going to drop with this afternoon's announcement. It could go to 6.2, maybe even lower, but I expect that it'll drop. I said in this video a few months ago, buy on the dips. Do I think interest rates are going to continue to keep going down? On one hand, no, because I think the Fed is still going to raise interest rates. At the last Fed meeting, I think they were scared off by some of the struggles regional banks were having. But I think the interest rate's going to tick up, which may impact, doesn't always impact, could impact the 10-year Treasury yield, and mortgage rates will follow that. So right now we're at 6.32. I suspect this afternoon it'll drop. It may drop for a couple more months. I think it may even tick back up. So as a buyer, buy on the dips, right? Buy when mortgage rates drop because then you can afford more house. Second, if you're a seller, realize, right, buyers are going to buy on the dip, so it's a good time to list your home. So anyway, I hope this information was useful for you and helpful for you. Reach out to me. Go to my website, joebrownc21.com. Leave me a comment. Let me know what your thoughts are. I love sharing this information with you. First of all, I'm a data geek, so I love sharing this information with you because South Tampa, Florida living is awesome.